For years, there's been this one question, this one big criticism that's kind of hung over the entire crypto industry, cutting right to its core. Is this whole thing just speculation? All just hype, with prices swinging on nothing but pure sentiment? It's a fair question, for sure. But what if I told you that the answer to that question is changing, like right now? Because some of the biggest projects out there aren't just selling a dream. They're actually generating billions, billions of dollars in real, hard fees. And here's the kicker. They're starting to use all that cash in a really powerful new way by buying back their own tokens right off the market. And this isn't just some small tweak. It's a fundamental shift in how value gets created and shared in crypto. It's kind of like they're building a value engine right into the code itself. Okay, so what is a token buyback exactly? Well, the easiest way to think about it is just like a stock buyback from the traditional finance world. So a project takes all the money it's earned from fees and it goes out onto the open market and buys its own token. Simple, right? And the whole point is to shrink the available supply. I mean, it's basic supply and demand. Less supply can lead to more value for everyone who's still holding. And this is huge because for the first time, you have this direct, undeniable link between a project actually succeeding and its token becoming more valuable. Yeah, and look, this isn't just some idea on a whiteboard. Some of the biggest names in the space are already rolling out massive buyback plans. So let's dive in and look at 4 of the big pioneers here, because each one has a totally different game plan. And wow, just look at the scale we're talking about here. I mean, these aren't little startups in a garage. Uniswap has raked in over $5 billion in fees. Lido, they're securing more than $26 billion in assets. These are absolute revenue-generating machines, and all that cash is about to get pumped right back into their own tokens. All right, first up, we've got the giant of decentralized exchanges, Uniswap. So back in November, their founder Hayden Adams dropped this huge proposal called Unification. And the idea is actually pretty simple, but it's super powerful. They're going to take a chunk of all those fees they're earning, use it to buy back their own UNI token, and then just burn it. Poof, gone forever. And they are not messing around here. The plan is to basically flip this switch on across their entire empire. We're talking the biggest pools on Ethereum, all the layer 2s, and even their next-gen V4 protocol. The goal is super clear. Suck up value from every single corner of the Uniswap universe and send it back to the token holders. But wait, it gets even crazier. On top of all those ongoing buybacks from fees, the proposal has this one-time massive move. They want to burn 100 million UNI tokens straight out of the treasury. Just think about that. With a single vote, they could literally erase over 15% of the circulating supply from existence, just instantly. Okay, next up, we've got Lido, the king of liquid staking. And they've got a buyback plan too, but there's a really important twist. Instead of burning the tokens and destroying them, they're going to take those LDO tokens they buy and add them to their own liquidity pools. The idea is to make trading their tokens smoother, more stable, and just generally more attractive. Okay, so this is the absolute key difference you need to get. With Uniswap's plan, it's deflationary. They buy them, they burn them, they are gone for good. Supply goes down permanently. Lido's plan is different. They take tokens off the market, sure, but then they lock them up in a liquidity pool. So the tokens still exist, but the circulating supply, the amount available to trade, gets tighter. See the difference? 2 paths, but they're both aiming for the same thing, more value. All right, our third case study is Ethena, the decentralized stablecoin that has just had this insane, explosive growth. Now, their approach to buybacks was totally different. It wasn't just a promise. It was more like a challenge to their own community. They basically said, look, if we can hit these absolutely crazy growth targets, then and only then will we turn on the fee switch and share the revenue. They had to prove it first. And you know what? They didn't just meet the targets, they absolutely smashed them. They needed $6 billion in supply. They're already over $7.6 billion. Check. They needed $250 million in revenue. They're pushing $600 million. Double check. They met every single goal, proving the model works before asking for the final vote. And the potential here is just staggering. I mean, listen to this. Investor Arthur Hayes said that flipping the switch could unlock $500 million in buyback power. To put that in perspective, that would be enough to buy back something like 12% of the entire token supply. That is a huge, huge number. And finally, we've got Arbitrum, the biggest layer 2 on Ethereum. But their buyback story, well, it's a little different. When they announced their plan, the community was, let's just say, a little skeptical. And a big reason for that was the timing and the fact that they were super vague on the details. So let's just walk through the timeline here, because it tells a story. First, the price of their token, ARB, had just gotten hammered, down 85%. Then, right before a massive token unlock was scheduled, which would flood the market with more tokens, the team suddenly announces strategic buybacks. But they gave zero specifics, no amounts, no dates, nothing. And since that announcement back in March, we've heard absolutely nothing. You can see why people are raising an eyebrow, right? It raises questions about whether this was a real plan or just a way to manage bad news. Okay, so we've seen the good, the ambitious, and, well, the a little bit questionable. So this leads us to the million-dollar question. Are these buybacks actually a guaranteed win? Is this a silver bullet, or is there more to it? It's time for a little reality check. So, yeah, is a buyback just some magic button you can press to make the price pump? Well, no, not quite. The truth is, how much impact a buyback actually has depends on a bunch of different factors. You know, the how is just as important as the what. So, what makes a buyback really work? Well, first, you need transparency. You need a clear plan like Uniswap has, not some vague promise. It also has to be a meaningful amount of the supply. A tiny buyback won't move the needle. And this next part is absolutely critical. What happens to the tokens after they're bought? Are they just sitting in a treasury where the team could dump them back on the market later? Or are they burned forever? Because, as we've seen, the only way to truly guarantee that supply goes down and stays down is to burn them. And when you actually crunch the numbers and look at the potential impact, the differences are just huge. Lido's plan, it could shrink the supply by about 1.6% a year. Pretty good. Uniswap's is a bit higher, around 2.5%. Both are solid, for sure. But then you look at Ethena's potential, a whopping 12% annual reduction. It just goes to show you, not all buybacks are created equal. Not even close. The details really do change everything. Okay, so let's zoom out. What's the ultimate takeaway here? What did this whole trend really mean for the future of crypto? What it really signals is the start of this powerful, new value cycle in crypto. Think about it. A protocol gets popular and generates a ton of fees. It then uses that revenue to buy back its own token, which reduces the supply. And that reduction in supply directly gives value back to the token holders. It's this simple, sustainable, and really beautiful virtuous cycle. Look, what we are watching happen right now is nothing less than the crypto industry starting to mature. This is a massive shift away from just pure speculation, hype and narratives, and towards a model that rewards real, fundamental success. This is what it looks like when crypto starts to grow up. And that really just leaves us with one final thought to chew on. As this trend gets bigger and more projects jump on board, the real question isn't if projects will do buybacks, but who will do them best. Which projects are going to use this incredibly powerful tool, not just for a quick price pump, but to build real, lasting, long-term value? That's the billion-dollar question, and that's what we'll all be watching.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.